So hi everyone, welcome to our online information session today. We'll be talking to Sam Sharma, who is a continuing education instructor with a focus on the Canadian Investment Funds course, as well as the Canadian Securities course. We're very happy to have you all here, and whether you're joining through Zoom webinar or through YouTube or Facebook Live, thanks for joining. My name is Grazieli Solomon, and I'm joined by the marketing and communications team here at Ashton College, as well as Rika, who is our communications and marketing coordinator. Rika will be here in the background, ready to answer any questions. Before we jump in, I just want to mention that throughout the live, you're welcome to ask any questions, mention anything, and we'll make sure to answer them all. Thanks again for joining, Sam.
You're welcome. Thank you very much indeed. Well, I'm very happy that I got a chance to talk to Maggie. Very interested in talking to Rita now. Hi, Rita, can you hear me?
Oh, Sam, I should mention that Rita is actually our admissions officer, and she's here to monitor our questions about admissions.
Oh, okay. Yeah. Well, thank you for clarifying that.
No worries.
I thought that Rita was one of the people who was very interested in the course and trying to figure out how to move a career forward.
Sure.
You know what? Why don't I jump into one of our questions and we move on from there?
Okay, sounds good to me.
Sounds good. So can you give me a little bit of information in regards to your background and yourself and how you found yourself teaching at Ashton College?
Oh, absolutely. I have, academically, I have a master's degree in science, which was in management of technology. Then I did my MBA in finance, and both of them I did from a place where I grew up. I grew up in Australia. So okay. I did both my degrees over there. And then I moved here, and I've worked in the banking industry ever since. So it's been 20 years since then.
Oh, wow.
Okay. Straight out of university, we came here to visit, me and a couple of my mates, and we ended up staying here. We found out that there's something that Australians are allowed to have, which is called a working visa. And okay. Guess what? We ended up being here. So it's been 23 years now. Yeah, 23 years since I've been in this country, out of which 1 year I've lived in the Yukon territories in Whitehorse. For a person like me, with an East Indian or Indian origin, as you can say, not very used to the very cold climate. So at the first opportunity I got, I ran out of the Yukon, came back to Vancouver. But
we're all used to. You have to kind of dive into it and adjust.
Oh yeah, and of course I started my career with CIBC. I worked for a year in the Whitehorse, and then I moved back to Vancouver. Wrote my investment funds in Canada exam. At that time, it was part of the Institute of Canadian Bankers. And Maggie, one of the good things that you'll be happy to hear is when you do the CIFC, you do not have a negative marking, okay? Back in my time, which was 20 years ago, when I had to write the exam, for any question I answered wrong, a mark would be deducted from that. So I just consider myself lucky that I passed it. And then I also took the Canadian Securities Course, and I took the Professional Financial Planning course while I was in the banking industry, and I was managing a portfolio where I did manage mutual funds as part of the portfolio. And it has been quite an interesting, I'll have to say, quite an interesting time when we were selling mutual funds. The industry now is way more rigorous, way more strict than it was at that time. That's back in 1998. At that time, 9/11 hadn't happened. So after 9/11, the banking industry completely changed. And one of the things that people normally tend to do is when they try to understand the industry, the securities industry, there are two courses that can tell you very well. One is a course which is focused more on mutual funds. which is called the Canadian Investment Funds course. And the other one is called the Canadian Securities course, which gives you a very comprehensive view of the investment industry in Canada. Now, if you want to sell mutual funds only, the Canadian Investment Funds course is okay. But if you want to move up the ladder, the Canadian Security course is the best thing to do. You do the Canadian Securities course, you do the Professional Financial Planning course, and the Conducts and Practices Handbook exam. You can actually be working as an investment broker in one of the brokerages if you wanted that kind of career. But if you do the Canadian Securities course, you will get to learn all the aspects of the investment industry in Canada. So what are investments? Why do people invest? What kind of people invest? Okay. What, how do you, when you meet a person, what do you have to do in order to see if a particular investment is appropriate for them or not? What are their major goals? And when you're discussing all this, this is called the client interview. And we're going to talk about that in a few minutes. But all of that you're doing, you then deciding what is a better thing for the person to invest their money in, and what are the pitfalls to avoid, what are the good strategies to adopt, and all of that you will learn in when you're studying the Canadian Securities course. Now, there is one very important thing that you should know about the course. There are 2 exams you'll have to write. There are 2 volumes, okay? Volume 1 and Volume 2. Volume 1, first 6 weeks will be studying the first volume. Then you go write your first exam, okay? That's called paper 1. And then the next 6 weeks after that, we'll be studying the second volume, and then you go and write the second exam. One of the pitfalls to avoid is once you've completed the 6 weeks for Volume 1 and another 6 weeks for Volume 2, do not give a large or a huge gap between the time you finish all your classes and the time when you write the exam. Because when you finish the classes, everything's fresh in your brain, in your mind. It's easy to understand, read the book and understand the concept and then write it. 90% of the cases, people who write the exam straight after maybe a week or 2 after finishing their course, they tend to pass the exam. People who wait, they find it difficult or harder to pass the exam. Does that kind of give you a good idea about the course, Maggie?
Yeah. Thank you, Sam.
No worries at all. The other thing that I was going to suggest, okay, so one of the things that you have to learn is if you're going to move into the financial services industry in Canada, ethics plays a very important role. When you do the Canadian Securities course, there is a whole unit dedicated on ethics. And I think the last, it's in Volume 2, and the last chapter, and as well as Volume 1, by the way, the first couple of chapters in Volume 1 and the last 2 chapters in Volume 2, they all focus on ethics. They give you, in Volume 2, they give you a case study, or they explain to you, you've got now that you've accumulated or acquired all the skills, what to do, how to decide what is appropriate or not appropriate investment for the client. And ethics plays a very important role in that. You'll get to learn a lot about what is allowed and what is not allowed. I have seen cases in my career where there were people who sold a mutual fund to a client, and they entered all the wrong information from the client interview and sold the wrong type of mutual fund to a client, which was not meant for them. And they did all that just to make sure they get some good revenue on their portfolio. And there are no second chances in this industry. So if you are caught having committed a mistake, an error, or knowingly done something wrong, the immediate result of that is a suspension of your license to sell mutual funds or any securities, and you will not be employable in any financial services institution or any independent financial planner company, or I mean, you cannot basically work in the financial services industry. So because that will always be something on your record. So that's why I always say that, you know, do your job right and do it right the first time.
Sounds good. It sounds like ethics is a huge part of this.
Oh, very, very huge part.
Can you dive into some of these questions that we have here?
Yeah.
Continue from there, and we'll touch base back onto the code of ethics and move on from there.
Oh, yeah. It says, let's take one of these questions out here is, how would you describe what mutual funds are to someone who isn't too familiar with the concept? So just to let you know, mutual funds, the best way to understand them is a mutual fund is like a basket of securities. Like you'll see, you'll see a fruit basket lying on your dining table, and it's got a lot of different fruits in there.
Yep.
And all those fruits represent different kind of investments. So it could be bonds, it could be stocks, it could be term deposits, it could be currencies, it could be derivatives, all different kind, all held in one basket. And that basket is known as a mutual fund. So what mutual fund does is, it is basically a vehicle or an investment vehicle that has holdings in it, and those holdings comprise of various kinds of securities. Securities, again, as I say, corporate bonds, government bonds, okay? You've got term deposits that are being offered by the bank, term deposits offered by blue chip companies. Then you've got preferred shares, and you've got common shares. You've got options and warrants, all of that. And currencies, foreign currencies, they will all be a part of that investment vehicle.
So it sounds like there's a particular route to follow when you're doing all of these things. So piggybacking off of what you're saying, are there certain formulas to follow when it comes to investment funds?
See, formulas are a very small part of the whole learning, okay, in this. I mean, yes, there are formulas. You need to know how you calculate interest on a bond, or how you calculate what price, if you're buying a share, you need to calculate, okay, what part will go to the commission from the broker from whom you're buying the shares. There are formulas, all of those in there. Okay, how do you determine the value of a mutual fund unit at the closing of each day? There are formulas for all that, but that is only 20% of the course. 80% of the course is understanding on following the process. So if Maggie, you were a client who came to me, okay, I wanted to buy a mutual fund, my first step would be to get to know you. In the industry, we have something called the Know Your Client rule, the KYC. We have a standard format. We get all your personal information, your work information, where you're employed, your personal net worth. We determine if there is sufficient cash flow available for you to be able to invest your money in. We determine all that, and we see what stage of life you're in. You could be someone who's 22 years old. You could be someone who is 35 years old. Someone who's 22, by the way, is just starting out in life, doesn't have a family, doesn't have children, has all that ability to take a higher amount of risk. But then you compare that to someone who's 35, has 2 children, has a wife, okay, is both of them, husband and wife, are working. Your goal then completely changes. Your goal could be saving for the children, for their future education, or it could be saving to buy a house, okay, or saving for a vacation or saving money for contingencies or a rainy day. Those are goals, right?
Definitely.
As you age older, let's say you're 50 years old. In about 10 years, you are going to retire, or 15 years, right? You become less and less, highly risk averse. Highly risk averse means you are not willing to take a higher risk because you know your retirement horizon is very small. You gotta save, maintain that principle. You gotta make sure that you are protected. Your principal amount is protected. It's not in a highly risky investment, because then your job then is to maintain capital preservation, I would say.
With that being said, earlier you touched base on a code of ethics.
Mm-hmm.
So what are particular code of ethics that you would say stands out when dealing with investments and partners and so forth?
Well, let's take the example of a mutual fund, okay? Or even a share, a common share. You cannot predict what the value of that share or that mutual fund is going to be in the future, can you?
Probably
because
not.
The market is volatile. It goes up and down. Sometimes it goes on a roller coaster ride, right? Sometimes it's going up, up, up and away kind of a thing. So what happens is when you obtain a license to sell a security, one of the most important thing you have to remember as part of code of ethics is whatever you present to your client has to be factual. It cannot be an assumption. It cannot be a personal opinion, okay? And one of the most important things is your client's interest is always ahead of yours.
Now, is this something that you say when you're teaching your course as well, making sure that these
Yes.
particular principles stand out?
Yeah, and a couple of the chapters in the first volume, we are going to be discussing all that. In detail, we'll be doing case studies to understand what happens, how to deal with certain situations. Those are very important. We will be talking about what kind of marketing material is allowed for stocks or mutual funds. I mean, I can't go and just put on a big poster out there on the street saying, hey, come to Sam Sharma for the National Bank. I guarantee you a return of 10% over the next year if you buy these mutual funds or if you buy these shares. Now, that will mean instant termination of my job because you are not portraying facts. You are misleading the client, and legally, misrepresentation is a crime. Right? So that is, sorry, yeah, go on.
No, I was just piggybacking off of what you're saying. So within that sense, is it important to have or to pay attention to economic factors when you're investing or when you are looking to invest?
See, when you're looking to invest, one of the chapters that you're going to study in the course is about economic activity, about the economic, what's the economy of Canada like, okay? You get to understand there are three important players in the economy in the Canadian economy. One is the federal government, which is responsible for the fiscal policy, okay? One is the Bank of Canada, which is responsible for the monetary policy. And then there's the financial institutions and the financial intermediaries who are responsible for, helping implement all these policies through all the rules and all the regulations that have been set up by a government regulatory organization.
I see. So earlier you mentioned different different types of investments. Can you name off a couple of them, and are there any similarities between them?
Well, investments can be of, let's start with the least riskiest investment. That's
okay.
Cash. Right? You take cash, you go and save it in an account. You know it's going to be safe. The return on that cash is going to be next to nothing, but that principal amount is going to be safe. Nothing can happen investment unless the bank goes under, right? In that case, you're insured for up to $100,000 worth of deposits by the Canada Deposit Insurance Corporation, which is a federal insurance corporation for all the banks, for deposits and all. Now, from cash, you're moving on to the next step, next level, which is things like bonds, government bonds.
Okay.
Government bonds are safe. Canada has a AAA rating, bond rating, which is considered investment grade for bonds. And that's one of the large ones. We're better off even than the US, okay? Because prior to Mr. Trudeau, all the prime ministers that were in, that had come in the last 25 years, they focused on what you call budget balancing. Like
Definitely.
Budget balancing means, you know, what revenue you earn, you spend that. You don't go overboard and spend more.
So that actually leads into my next question. You touched base on the difference between the Canadian marketplace and the American marketplace. So what would you say is the biggest difference between the two?
Canadian marketplace is more regulated. Okay, the kind of you know, the kind of scam, the kind of fraud that you witnessed in 2008 with the market meltdown in the US would not be possible to that extent in Canada.
Okay.
Okay, because the whole industry is highly regulated. There's regulatory bodies that are making sure that you're doing everything right. Canada happens to be one of the most highly regulated marketplaces in the world, and which is a good thing because the mandate of these regulatory bodies, like you have the BC Securities Commission, you have the Ontario Securities Commission, right?
Yep.
All of those, their job is to protect the interest of the investor from unfair practices. They ensure that in the market, fair practices are being followed up by all the players. Okay, I go back to the 90s when we had a case called the Bre-X. This company said that they found a huge gold mine deposits in Indonesia, and they produced all these technical reports to prove all that, and they raised, I think, about $600 million or so, and later it turned out to be a hoax, all fraud, and people lost a lot of funds, a lot of money. So guess what? That's when the government tightened up everything even more. They really tightened up. And today, if I sell mutual funds, for example, if I'm selling it to Graziel, and once I've done the sale, the client has 2 days to decide if they want to continue with the sale or not. They can actually, within 2 days, 2 business days, call up and say, listen, I want you to cancel that transaction. And that will be done.
Okay. So with that being said, what would you say are your personal strategic investment moves, and how does that translate through your teaching?
My philosophy is very straightforward. I always look for, when a client comes in, I always make sure I get to know them very well. I get to understand their family circumstances, their work circumstances, and what are they in a position to invest or not. I always try to do that. And before we even invest, I want to look at them and see what moves or what steps can I take to improve the cash flow. As an example I'm giving, if I had a client, Mr. A or Mrs. B, okay, and they made $100,000 a year between the two of them, but they had, let's say, about $60,000 in loans or credit card balances, and they're all spread out. Okay, now guess what? they're spending probably 60 to 70% of their salary per month in servicing those debts. So maybe a better thing to do would be to sit down with them, restructure the debt, consolidate the loans and the credit card debt, have one payment, okay, instead of so many payments. I actually did this once in my career, in my previous role when I was in business banking. We used to do business banking. We used to handle the business side and the personal side. And a client came in, had about $64,000 in debt, okay? And the monthly payments were about $3,000. No, more, $4,500. And when I consolidated everything, and their credit score was impeccable, the credit bureau reports were impeccable, always on time, even though they were high towards on the limits. I consolidated the loans, and we had one payment of about $1,100. So they have saved themselves about $3,500 in cash flow that they can now use for other stuff.
Yeah.
Between the two of them, they had 2 children, by the way. Okay, they were able to put money into RESPs. He was able to invest some money into RESPs. You know, you have to start small before you get to the big part.
So with that being said, it is important to have a good connection with your clients. So it runs
important. Very important to have a good rapport, good connection, good understanding of your client, and make them feel comfortable dealing with you as well. So your body language, how you sit. If I was to sit like this, if I was to sit with my hands folded, would mean that I'm not open to listening to them.
Definitely,
okay?
I can see that.
If I'm interrupting, if you're talking to me and I keep interrupting you more and more, and you're a client, and I'm an advisor, and you asking me question, and even before you finish a question and I'm answering you, that means I'm not listening to you. So your non-verbal cues, the non-verbal skills are very important. Listening skills are very important, okay? And important is to repeat or summarize every important point that they have raised or concern that they have raised, and see what you can do to find a solution to that.
Definitely, because it shows them that you are paying attention and you want to find results for them. Was there a time that you found yourself with a difficult client?
Yeah, I did. I had a client who came to me wanting to invest in an equity mutual fund, and when I asked him why does he insist on investing in an equity mutual fund, which is one of the risky ones, he says all his friends have invested and they've made tons of money, so he wants to do that. Okay. And okay, the friends may have different financial circumstances. They may be financially very stable or healthy. Doesn't mean that same applies to you. When I looked at him and I did a whole risk profile assessment, I found out that that's a highly risk-averse person. He's a guy who, if I was to put his money into an investment, which is totally, invested in equities, like preferred shares, common shares of startups, or common shares of growing companies and all, which are highly risky and volatile, this guy would have ended up spending sleepless nights every day, every night, wondering what's happened to his investment or principal amount. But he insisted, and I said, I'm sorry, I won't do it.
Yep.
So, and I let the compliance officer know that I had taken this decision not to do it because my conscience doesn't allow me to do it. And I think I ran into him about a year later, and he did say that was one of the worst choices he ever made in his life.
Well, you live in
lost
England,
about
right?
$8,000 in those equity mutual funds that was all invested in, all concentrated in startups.
Yeah.
So that's very important. That's one of the toughest situations, and you have to just take a step back and remove yourself from that problem. You have to look at it from a very neutral perspective and see, does it make sense? If it doesn't, you ask your compliance officer what to do. The compliance officer may say, get him to sign an indemnity agreement which you indemnify the bank of any legal liability or responsibility, and then do it. Or if it's against your principles, if it's your conscience doesn't allow it, then don't do it. We have the right to refuse for these reasons.
So with that being
nobody
said,
can penalize us.
Of course. With that being said, diving into your teaching skills, how do you go about educating your students? Are there any particular things you like to focus on when you're teaching?
Yeah. So one of the important things I always do is let's say the first class I'll have in which I'll be focusing on I'll be looking at the whole outline of the course. What are we going to cover in volume 1? What we're going to cover in volume 2? What important chapters are there? What kind of weightings do they have? Each chapter, like the first 2 chapters are itself about 18% of the total exam, the first exam. Okay, then third chapter or the 4th chapter is only about 6%. So I will tell them which ones are going to be the important ones that we're going to focus on, right? We get the important ones out of the way and then we focus on the easy ones. I have prepared PowerPoint slides, presentation slides for each chapter that I will go through. I do expect that students, when they are learning, they're not kindergarten kids, right? So they don't need to be spoon-fed. Exactly. So I would expect that when they come into class next time, they would have at least read the chapter, okay? And if not fully, at least some of it, skim through it so they know what they're doing, right? We will, and so that when we discuss it in the class, I am not going to go page by page from the textbook. I am going to focus on important concepts, and I have PowerPoint slides that focus on that, okay, that keep everybody focused and concentrated on what we are learning. I always try to make sure for each concept, I will give real examples from life, okay, to make them understand. I will take some, I'll even pick up the book and or go up onto the web, onto certain websites where and do the quiz questions from there to help them out. Because the more questions you answer, the more clear the concept will become to you.
Definitely.
Right? So I always tend to do that, and I will always hand them hard copies, normally for in-class training, or I will email them soft copies of all the presentation, the slides. And at the end of the class, normally I tend to split them into groups, depending upon how many people are there, minimum 2 groups. And I ask them to summarize what they've learned today and how they could apply in a certain particular case. I will talk to them about a case study. I'll just give them an example. Nothing big, but tell them to sit down in a group and brainstorm each other and look at it and come up with a solution.
Sounds good. Sounds like you're on top of your teaching.
Yeah, so I always tend to do that. I'll also hand out quizzes for each chapter, normally about 25 questions. And I ask them to go and answer them. And then next week when they come back, I'll give them the answers and I'll ask them to grade themselves on that.
So, can you give me a small run through on what an everyday work day looks like in the field? Well,
sure. In personal banking, wealth management, if you're working in a bank, depends. You may have a portfolio, you may not have a portfolio. Okay. If you have a portfolio, you're always going and looking at how the portfolio is performed, what are the winners, who are the losers. Okay, you're looking at how are the portfolios doing, the individual ones, which has something that's gone down, something that's gone up. You will call up your clients, follow up with them, advise them as to what's going on, talk to them, see what the strategy should be. Okay, are they getting concerned or not? Because look, it's important to determine, is it a short-term investment? Is it a medium-term or a long-term investment? For a person who's putting money into RRSPs, they're saving for their retirement. Their time horizon could be 20 years, 25 or 30 years. So they have a long time horizon. They're not concerned with the ups and downs in the short term, okay? Because in the long run, you know, as it is, you know, sometimes it'll go down or then it'll go up and then and up. So kind of a thing. So, you know, in the long run, it's always going to have grown in value.
Definitely.
So those are the kind of people who will not have a problem about this. But then are the people who have short term, right? They don't want to invest in something which is risky, right? And that's why you invest them in something which is liquid, can be used whenever they want. It's not going to be a problem that in the short run may have fallen in value, and then they're going to go, whoa, we needed the money now. What are we going to do? My portfolio is now 10,000.
What about those people looking for a retirement plan, but the issue is they don't know where to go? What makes your particular, like, how do you drag somebody in and make them feel comfortable enough to continue with an RRSP with you and as you,
okay.
Or how would you particularly do it?
Graciela, for that, I have a very simple solution.
Okay.
Okay. And that is, if you're working for a bank, okay, or an investment brokerage, okay, what you do is your existing clientele at the branch level is going to be your best, you know, hot leads, you call it, not cold leads, hot leads. They're banking with you. You go look at if they have any RRSPs or not, and then you call them. And if they are banking with you, with the bank, they're doing all the daily banking with a particular bank, and they have everything, mortgages, you have loans, they have all the daily accounts, everything. But you see that they don't have an RRSP or any kind of savings. What's the first question that comes to mind? I should talk to them.
Definitely.
I should see, are they doing it? If they're not doing it, why aren't they doing it? Maybe it's a good strategy to start. It's never too late to start saving, okay? Never too late. You know, that's what I did. And I was able to do a good job with that, because at the end of it, I worked in personal banking, business banking for about a year and a half, 2 years, before moving into commercial and corporate banking. But the fact of the matter is, in those 2 years, I developed my mutual fund portfolio to about $28 million.
Oh, wow.
So, and a huge base, by the way. So, which was a good thing, okay? Yeah. And that's why you will feel the satisfaction and the inner satisfaction when you see that you've done something good for the customer and they are happy with it. And in the long run, they are going to enjoy them.
Definitely.
I mean, I take the example in my current job role in corporate banking. If a client wants to get some, they want to do some borrowing or anything, I am always very careful about what the rates are. Just today, I was telling a client that if we hadn't fixed the interest rates on some of their capital expenditure term loans, which were about $22 million, you know, today, if we'd done it today, instead of 30 days ago, today the rates would have been up by 1%. So they lucked out. They got a very good rate. So it's always being on the lookout for these clients.
Definitely. And it sounds like you have to have a certain way of organizing yourself.
Yeah.
Is there any tools that you use?
Well, for an old schooler like me, the best tool is, best tool is a pen, a notepad, and a diary. And the computer, of course. You know, when you have to take notes after every client meeting, you know, you have to do all that. And you know, a cell phone when you use, you know, when you need to remind yourself something, those are certain basic tools that need to be there. And then, of course, you've got the customer relationship management tool that every bank will have.
Yeah.
Okay, use that to your advantage. Okay, get to know about clients, get to know what all they have with the bank. Perfect tools.
Definitely.
Hey guys, sorry to interject. We just have a couple of questions from Facebook, and I'm gonna read them out loud, just because they're viewing everything from Facebook and they are not able to join the webinar. So it's more of an admissions question, but someone's wondering if there is a required minimum number of attendance for the live webinars.
Well, if Graziella, if you want, I can take that question.
Yeah, sure.
No, there's no required minimum. I mean, you are a mature student, you're a grown-up student. You know this is an online course, you participate in it, you get value out of it. If you don't participate in it, you lose out, because when you're studying on your own and you have questions, then you have no one to go to, because you would have missed all the classes, right? When you're in a group, you can interact in a group. I've had my students create groups, WhatsApp groups or something, where they're interacting and asking each other questions. And if there's something that they do not find an answer to, they come and ask me. They will contact me by phone, or they will ask me in the class or online sessions. But at the end of the day, important thing is that you don't have to attend the classes if you don't want to. But if you don't attend the classes, you're missing out on something very good, very important. Classes, whether they're online or in class, or in-person class, they are a valuable tool of learning. Because when you're interacting with people, you get to learn more. When you're on your own, you're not learning a lot. You're just focused on whatever is written in the book or a textbook, or whatever. You may have a guide that you're reading, something like that. It's not, I mean, it's just there. But if you have a question you can't understand, then you got to figure out, who do I turn to learn about or understand this concept. So online classes or in-person classes, that is a valuable and a very important tool to improve your knowledge and to clear up your concepts and do well.
Perfect. Thanks so much. I guess we have a follow-up question in regards to that. Someone's wondering if they have access to the recording of the webinars after the class for self-study purposes. I mean, I'm sure, like you said, it's better for them to actually be there actively participating live, but they're just wondering if they can access it for self-study.
Gracielle, now maybe I'll ask you, previously when we did online classes, I don't think there was any, I mean, we only started with the online classes when COVID-19 happened. So I don't think there was any recording, but I'm under the impression that with the online classes that we're going to have now, there's going to be, I think the webinar will be recorded. And
yeah.
Am I correct in thinking that?
Yeah, hi, I would like to answer that question too. Thank you for adding on that, Sam. Okay, so we do highly recommend that the students will attend the live online session. It's completely interactive. Pop-up questions during the sessions will be there. And yeah, we do have pre-recorded classes available upon request. So they will only need to send us a request to our student services, and they will definitely have the access on that.
Okay.
Yeah.
Perfect. Thank you. So yeah, I guess I can let you guys proceed with closing remarks. Those are the only questions that I have from Facebook for now.
Sounds good. So thank you so much, Sam. It was great having you here and getting to know about yourself and the program a little bit more. If there are any further questions, feel free to send an email at ceinfo@ashtoncollege.ca or by phone at 604-891-1256. Thank you to everyone who attended and asked questions, and Sam for joining us today, and I hope everybody has a great week.